Trading inside bar false breakouts with Fibonacci retracement. I don't really know if you are familiar with this technical trading tool. However, I will try to show you how to trade it in a simple and efficient way in combination with the inside bar false breakout. What you have to know is that in an uptrend or a downtrend, the market creates impulsive moves and pullbacks. The Fibonacci retracement helps us highlight the most important pullbacks level in the market. The best Fibonacci retracement levels that I personally use are the 50% and 61% levels. According to my experience, these levels are the most important areas that experienced traders watch in their chart. Many watch 38% retracements also. Our strategy is simple. We select the technical tool on our chart, and if the market moves strongly, we wait for retracement. If the pullback reaches 50% or 61% levels, we need just a price action signal to confirm our entry. See the chart here. By adding this technical trading tool to your strategy, you will be able to identify potential trade setups in the market. If you have analyzed the chart here given without using it, you wouldn't know the reason why the market dropped after the pullback. Fibonacci tool can be used to trade the pin bar, the inside bar and the engulfing bar setup as it was discussed in previous videos. The trade above is very profitable because there are lots of factors of confluence that encourage us to place a sell order. The first reason is the trend. It is obviously down. The second reason is the key Fibonacci ratio that represents a resistance level, and the third one is the inside bar false breakout. One signal is not quite enough to make a good trading decision. You have to look for multiple triggers that support your analysis. This way you will put the odds of success in your favor. Have a look at this chart. As you can see, the price moved higher, pulled back to reach our key ratio, and then continued higher. The formation of the inside bar false breakout in this area indicates that the pullback had finished and another strong move will take place. Understanding the market structure is very important to know how to use this strategy in your advantage. If the market is trending, you can trade the inside bar false breakouts as we discussed before. But if the market is ranging, you have to change your tactic. Now have a look at this chart. In the chart here, the market is trading between horizontal support and resistance levels. As you see, if you had entered as soon as the market breaks out from the side bar and the resistance level, you will be caught in a false breakout. The false breakout has formed because amateurs tried to predict the breakout of the inside bar and horizontal level early to pick the top, but the market faked them out and formed a bull trap. If you find this pattern in your chart and you understand that buyers were trapped by sellers, take this trade without hesitation because it is very profitable and it has good risk reward ratio. You place a selling order after the close of the break bar and you set your stop loss above it. Your profit target is the next support level. This strategy is not complicated, but it requires time and practice to master it. Bear in mind that a false breakout doesn't happen every time, and not all false breakouts are worth trading. The benefit of trading the false breakout of the inside bar candlesticks pattern. If you master trading this pattern, this will allow you to stay away from trap traders and enter the market when novice traders have to get out with a loss. This strategy is not a holy grail. You have to be prepared to accept some losing trades. But what is interesting about it is that the risk reward of this signal has a great potential because when big participants surprises amateurs and take their money, the market moves very strongly. And if you can analyze correctly what happened, you will enter in the right time and make big profits. Imagine risking say 50 points for 400 points profit. Using this price action strategy will help you predict proper turning points in the market in advance and understand how banks and financial institutions trade the market. As you can see in the chart above, the market is trending down. So as a price action trader, I will try to follow the trend and look for powerful signals at the most powerful key levels. The first signal we got in a pin bar that was rejected from a support level that becomes resistance. The second factor that support our decision to sell the market is the rejection of the pin from the 50% Fibonacci retracement. The third factor that encourages us to take this signal is the rejection of the pin bar from the 21 moving average that was acting as a dynamic resistance level. The second signal was an engulfing bar candlestick pattern. As you can see in the chart, this candlestick pattern was formed at a resistance level in line with the direction of the market. This is how you can trade trending markets using our price action signals. It's simple, just identify the trend and the key levels. It can be a support or resistance level, a 21-day moving averages, or 50% and 60% Fibonacci retracement. Wait for a pin bar, an engulfing bar, an inside bar, or an inside bar false breakout to form near these levels in line with the direction of the market, and then execute your trades. It's not complicated. As you can see in the chart here, the market is trading horizontally between support and resistance levels. This market is completely different from the trending market, and the strategy to trade it must differ as well. In ranging markets, we trade from the boundaries. I mean from support and resistance levels. Don't ever try to trade inside the range. In the chart you can see we had two powerful signals. The first signal as a pin bar that was strongly rejected from the resistance level, and the second signal was an inside bar formed near the support level. Here is another chart. As you can see in the chart here, there are three powerful pinball bar signals. When the market approaches the 21 moving average that acts as a resistance level, sellers reject buyers and form a pin bar that gives us a good entry point.